Good morning, everybody, and welcome to this Think Learning webinar, Top 3 ASX Mining Stocks. My name is Carl Capalingua. I'm the market analyst over here at Think Markets Australia. Australia, of course, being the centre of the universe when it comes to mining. We'll check out the top threes in a few different categories today. We'll do that after we talk about the Think Markets difference, which is substantial. $8 flat rate ASX share trades, your own holder identification number, unlimited phone support, and no hidden platform or subscription fees when you put that all together with an amazing Think Trader app that's got everything you could ever want on it. There are 5 fantastic reasons why your next ASX share trade should be with Think Markets, and I'll give you 5 more if you are new to the Think Markets family. Sign up and get trading before June 30. Your first 5 trades are on us. There are some T's and C's, so head to the website for further details. The agenda for today, as I mentioned earlier, is to discuss not just the top 3 ASX stocks, but we'll look at a few different categories here. So we'll check out how the majors are going, and in that case, we'll just go for the top 3 by market cap, and just an update there on their valuations and technicals. Then we'll have a look at the gold sector, which is in theory still part of the local mining sector, but often considered as, as a separate sort of category. Then we'll break down the prospective miners on the local stock exchange and look at the soon-to-be producers and then some explorers as well. The ones we're going to look at today in the majors, and as I said, we'll just pick the top 3 by capitalisation here just to make things simple. Maybe it's another webinar down the track when we look at the rest of the majors out there. We're just simply going to investigate the valuations and technicals on BHP, Rio and Fortescue. Then we'll look at the gold producers as their own sort of category. We'll have a look at Newcrest's valuation and technicals, simply because it is obviously the biggest by a long way in that sector. And then we'll have a look at a couple of more, quote unquote, more interesting ones where we'll look for potentially some undervalued producers at the moment. The soon-to-be producers, they're again from the broader sort of mining space. Coincidentally, Calidus happens to be a gold stock as well. But we're going to look at Adriatic Metals, Calidus and Vulcan Energy. It's a little bit harder to give you valuations on these ones because they're not producing yet, and you'd have to forecast some cash flows, which, let's face it, are going to be uncertain based upon execution risk and then prices when we get there, prices for whatever they're mining. So in that case, we'll look at NPVs, which is not the best way to do it, but it's basically probably all we can do really at this stage. And in terms of where they are in their progress, mining, actual production must be imminent. Then we'll have a look at 3 explorers. We've got Eagle Mountain Mining, Peel Mining and Venture Minerals. And in each case there, to qualify for today's presentation, we would like them to preferably have an indicated resource, so something that they know they've got, and then potentially they're doing some further exploration to shore up what will hopefully be a productive operation somewhere down the track. So plenty to get through in this presentation. It will be probably more top level than nitty gritty, but if anything, I thought it'd be better to cover more ground than less ground, and let's give you a bunch of ideas you can then go off and do some further research on. In all cases today, the technicals have to match up with the fundamentals. That is, we must see a nice short-term, medium-term and long-term uptrend on the chart, and we must be near an opportune entry point as well. So where the fundamentals and technicals come together, we're going to get the best trading opportunities. And first up today is BHP, but before I get into this slide, I want to take a little diversion to the charts. On screen is the benchmark ASX 200 index, BHP, Fortescue, Rio, Newcrest, and even some of those soon-to-be producers actually sit in this index, so it is relevant. But we are seeing a fantastic technical picture right now. What we're seeing is an environment where cash is flowing into equities. Okay, so that is the backdrop within which we're doing our analysis today. If we want to get down to the nitty-gritty technicals, short-term, long-term uptrends look great. Candles look amazing. Price action looks wonderful. There's absolutely nothing in that chart to suggest that the current strong performance in equities won't continue. We may see some pullbacks along the way, but that underlying trend is very, very strong. Let's have a look at the materials sector now. So this is the XMJ. Looks very strong as well, potentially lagging the broader market after leading the market for much of 2021 and indeed in 2020. I think there's potentially a little bit of catch up here. Either way, it looks very, very strong. Short-term trends, long-term trends look good. We can see some nice candles at the end there, and the price action is moving back into this sort of higher peaks and higher troughs after this little pullback through May, as some of the commodity prices did pull back. But otherwise, that also looks very, very constructive for further gains. And then let's have a look at some of the commodities themselves. So aluminium on screen. Pardon me while I change this to a line chart, and that's simply because we're looking at London Metals Exchange evening fixes here, so you get a single closing point for the day, not the open, high, low close that we might be used to for many of our other charts. But the line gives us the idea there of what's going on, and it is a very strong trend in aluminium at this point, and we're just going to scroll down the list, and we're looking for broader trends here. A little bit of a short-term pullback in copper, maybe it's under some short-term pressure there, but the overall trend is still very, very strong. Iron ore now, that looks gangbusters still, amazingly strong there. We're going to talk about a number of iron ore stocks in a second. Nickel still looks very, very strong, quite happy with the way that one's going. Lead, which is not one we've got huge producers of here based on the ASX, but that also looks very good. We're going to talk about a prospective tin stock a little bit later on. That chart looks amazing. There is a major short squeeze in tin at the moment. That is, there's very little of tin supply around, and demand is very high. Looking at uranium, I don't think we have any uranium producers today, but as a sector, uranium stocks actually look very good. That looks quite constructive as well. We'll skip oil for now because it's not really what we're looking at. Maybe we'll have a quick look at thermal coal, which has bounced, and then get to the last of the base metals there, which is zinc, which looks very, very interesting as well. And we do have some zinc exposure in the stocks we're going to talk about. Silver, we do have some silver exposure as well, going pretty well along with gold, not bad. But unlike the other ones, they're not really shooting the lights out, but there is still some strength in those trends. Okay, let's head back to BHP. And I said just very high level stuff here on the majors. We're looking at where they're currently trading versus what the brokers are thinking. So this is Thomson Reuters data on screen. Brokers have an average price target of about $50.13 for BHP, which leaves fairly marginal upside there, 2.4% based upon the current price. And that was obviously when I took the last snapshot before we started this presentation, and the actual current price on the ASX might be different. So, and that will carry through to the rest of these. So understand, therefore, that some of these numbers may change as this changes. Okay, obviously it's not a real-time price. We are expecting over FY22 and FY23, BHP to earn an average of $4.28. Therefore, that gives it an average P of around about 11.41. What's going on here? Custom or estimates? Well, this is what the brokers are estimating, but I don't have it on screen. There's a little bit of a blip there in terms of we've got a big spike coming in FY21 as earnings are expected to increase sharply, and then we've got earnings expected to sort of do this as we go further out, and that is a common theme for many of our large miners, as the big brokers are still not believing really that the current high commodity prices can be maintained into the future. So with some of the brokers, we are actually seeing expected earnings contraction into FY22 and FY23. So if there's a big jump here in terms of percentage, okay, and some minuses here, okay, and just doing just a very simple average, the estimates over this time frame come out to be a growth of 19%. And then this is a number that I can put into my fancy little spreadsheet and say, well, let's just take into account more the negative emphasis rather than this short-term blip, because it's a bit of an outlier. And therefore, I've used a more conservative growth estimate of 5% for BHP going forward. So I think that's quite conservative, given where I think commodity prices are going to be. I do believe they will stay higher for longer than some of the brokers are expecting. And therefore we will see some upgrades to broker commodity price estimates, and therefore upgrades to some of these prices. So based upon a 5% growth rate for the next 2 to 3 years, this is my valuation matrix for BHP. I think that it's a bargain at $37.23. Well, of course it would be. We're not going to get it at that price. I think it's great value around about the $50 mark, and that's where we are right now. I think it would be only good value at around $62. I think the fair value is probably $74, which shows how undervalued I think some of these big mining companies are at the moment. And then this fully valued, I'm pretty sure, is roughly just double that. It's just a little formula in there. We won't see BHP fully valued with a PE of 34 times, I would suggest, for quite a while. But it does put us around about here. I think, BHP is somewhere around about great value at the moment. If we look at its fundamental valuation metrics more broadly, we can see where it sits sort of comparing to the All Ordinaries Index, which is the top 500 stocks on the ASX. It's about average in terms of its enterprise value to revenue, and then you can see where it sits compared to some of the other metrics I look at. So, for example, it's in the top 8% of companies in the All Ords based upon its enterprise value to EBIT adjusted, top 15% of All Ords companies based upon its PE, and then so on and so forth. It's not highly rated, for example, in terms of its price to book value. If we take an average ranking of the various metrics, we get to 76%, which puts it in the top 9% of companies. So I would say BHP, on a valuation basis, is better than 91% of companies on the ASX. So it's looking quite well valued for me. Moving on to Rio Tinto, and if they all come out as fantastically valued, that doesn't mean you just run out and buy all the stocks, because obviously you want to have a diversified portfolio, and BHP, Rio, and the next one, Fortescue, do fairly similar things. Okay, so take that into account. I'm just giving you information here. I'm not telling you how to construct your portfolio. Okay, Rio Tinto, once again, very slim margin based upon its current price to where the average of the brokers' expectations are. And it does speak again to this sort of short-term spike for FY21 in its earnings, and then coming down after that with negative percentage growth. Once again, I've taken a discount to what the estimates are, and you might say that's quite drastic to actually move this into a negative growth estimate going forward. And you then might say, well, why was BHP plus versus Rio's negative? And it's a lot to do with the product mix of the two respective companies. BHP does have a significant energy exposure as well, which does diversify the business. Long story short, you either agree or disagree with my estimates. This is what the big brokers are thinking. That's not me at all. That is based upon the data that they supplied to Thomson Reuters, and then this is me here. So you can see where I am compared to the averages. Okay, and that, long story short, that puts us with Rio Tinto around about $125. It puts us at good value as well. So potentially with BHP at great value, Rio not as cheap as BHP. But that's just my opinion. How does it fare compared to the All Ords, the top 500 stocks on the ASX? A little bit better than BHP, funnily enough, within the top 5%, and I'll let you press pause, and you can do that at any stage of this presentation and see what those metrics are, or how Rio compares to the other stocks based upon those metrics, but it does rate very highly, and it still looks quite cheap. Fortescue, once again, I've gone for quite a conservative estimate here with a minus 5% earnings growth over the next few FYs. This one is probably the least preferred, I would say, based upon the broking estimates. And what we're seeing here, I guess, between the first two and this one is the lack of diversification of Fortescue. It's effectively a one-trick pony. It's an iron ore play, whereas the other two are far more diversified. So if iron ore prices are expected to do this, we are going to see that reflected more and more in here. However, I do think that Fortescue is very well priced at this point in time, and it's largely to do with the fact that I think iron ore prices probably will come back, but maybe stay well above where the brokers are expecting, and therefore that means upgrades to iron ore price assumptions from brokers. Macquarie Bank has already done it, and the others I think will follow, and then we'll see upgrades to the Fortescue share price target, and therefore this will improve. Given where it is right now, and with my what I think is a conservative forward growth estimate of minus 5%, I do think that Fortescue, with the last price of $23.22, is somewhere between great and good value, so fairly well priced. And because it is looking so cheap based upon its current PE, and even with that low growth rate, it is very highly rated against the other all odds companies, and potentially even in the top 2% of best value companies going forward. Looking at Newcrest here, and this we've switched into the gold producers now, and we're taking a very high-level view of Newcrest. Straight away, you can see that the ratings are far lower for Newcrest than they are for BHP, Rio and Fortescue. Hey, it's not just gold, we should say it does have some significant copper exposure as well. I've taken, again, a slightly more conservative view of the earnings growth going forward compared to what the stated estimates are from the brokers. Interestingly, Newcrest is actually the most undervalued of the stocks we've looked at so far, and maybe that's more to do with the confidence that brokers have in forecasting the gold price compared to forecasting some of the other commodities, which are, let's face it, in very substantial uptrends as we saw, and could therefore be prone to pulling back once some of the supply disruptions that COVID has caused work themselves out. So potentially 10% upside there, according to the brokers. It's looking to me at 28.33, somewhere between sort of good and fair value. So maybe not as attractively priced, just from my perspective, as some of the other ones, and that's also reflected, I think, here. So a little bit of a divergence between the broker views and some of the metrics that are on screen, but you wouldn't say that Newcrest is at all expensive at current levels. Okay, we will drill down a little bit more now into the next few. These are gold producers which I feel are undervalued based upon their production profile, their cash flows. More importantly, I think there are some very cheap gold stocks out there in general, and also their potential exploration upside as well. And that is a key factor in the next two picks compared to some which are just straight out producers and with less exploration upside. So the first one is Alkane Resources. Gold production and exploration is what they do. Operations in New South Wales at their Timingly mine, which is 100% owned, producing somewhere around that sort of 50,000 ounces of gold per year. So, very much a junior producer at this stage, but they do have resources in excess of 1 million ounces of contained gold, and looking to expand that substantially with their Roswell and San Antonio resources to the south of the existing mine. They are expecting to have those operations online in FY23, and Timingly, Roswell, San Antonio are all open at depth and along strike, and are highly, highly prospective as well. So, when you look at potential to convert exploration success, I think this one is very good. You wouldn't say it's the lowest cost producer out there. That's a double-edged sword. Certainly it's not great to be a higher cost producer. They're not necessarily in the highest tier, but there's probably in that mid-tier. But it does then give them potentially more leverage to an improving gold price. So if you are a gold price bull, often the key is to pick the gold stock with the highest leverage. You might end up saying, well, I think gold's going up, and then I picked the one with the least leverage, and I find that gold went up and I didn't get the bang for my buck in the gold company. So in one sense you go, well, I need to pick the lowest cost producer because therefore it'll have the greatest profit, but sometimes ones with the slightly higher costs have much higher leverage, therefore impact on the bottom line and their valuations. So in terms of the valuation, the brokers are fairly positive on this one. There's still about 10% upside seen based upon their estimates. You can see obviously what the average PE is for the next few years, which is pretty close to the market average PE. And you say, okay, well, it's average value. Well, it's not, because the growth on this one is actually very, very good. If you look at just the estimates, and sometimes these depend on operational circumstances, but the brokers are expecting significant growth over the next few years. I've gone way, way more conservative. And even with that more conservative forward growth estimate, we're getting some really good numbers on this one. So, it's saying, look, bargain around about $1. Don't forget we're currently at $1.07. Great value at $1.30, and then going on for there. So we are, close to the bargain, or certainly somewhere between bargain and great value on Alkane Resources. And we will look at the charts for all of these stocks very shortly. For now, we'll just get through the fundamentals. Perseus Mining is the next one. Once again, that's sort of mid-tier in terms of cost, but again, we're talking leverage. These operations are in Africa, primarily in Ghana and the Ivory Coast, both 100% owned operations. A much bigger producer, so where Alkane was very much a junior producer, this is very much a mid-tier producer at 250,000 ounces of gold per year, 3 million ounces of gold in the ground, 7 million resources, and I should have put some bullet points on, highly prospective with the exploration program as well, and building out those resources going forward. In terms of what the brokers think, again, about sort of 10 to 11% upside from here. You could look at the PE is very, very cheap indeed at 9.59. Once again, broker estimates for growth are substantial. They're at 42%. I've gone for a very conservative 20%. And what does that leave us with? Well, at 147, I think we're looking very, very cheap on Perseus indeed. And it is reflective of really most of these gold producers trading at a significant discount to broader market value. So, you do have to understand that as well. If they have been trading at a significant discount to broader market value, a couple of things can happen. They continue to trade at that discount and you don't get the bang for your buck you were hoping for by buying something you thought was really cheap, or they do catch up. They get re-rated and share prices rise. And I'm hoping, obviously, by presenting these to you today, that's the second scenario, not the first. But hey, it's up to the market, not up to me. Okay, let's look at the soon-to-be producers now. We're moving away from gold, obviously, we're not far, are we? We're moving to silver and zinc exploration and hopefully production very, very soon from Adriatic Metals. These guys have operations in Bosnia-Herzegovina and in Serbia. Both Vareš and Raška, very, very close together geographically speaking. We're going to have a very long mine life, very low cost production, very short payback period. 1.2 years is fantastic. Net present value of resources in the ground of US $1 billion. And we're looking at an enterprise value of the company right now of only 330 million. What does net present value mean? Well, basically, if you forecast the cash flows out over the life of the mine and then discount those cash flows back to a present value, take out tax and things like that, and costs obviously, in today's dollars, the value of the resource is worth US $1 billion. This is obviously a substantial discount between the net present value and the $330 million enterprise value. Now, an enterprise value is simply the market capitalisation, adding debt and then subtracting the cash in the business. I think it's a better underlying value measure than simply market capitalisation when comparing to net present value. And the reason for the difference between the two words, execution risk. Okay, so lots of things can go wrong by the time we get to the end of the mine, which is included in that net present value. And therefore the market is never going to fully reflect the net present value of an operation, of an asset in its market capitalisation or its enterprise value. But I'm just trying to give you an idea of your potential margin of safety, your buffer there. So if we can get it at a fraction of that, then, and depending on what fraction that is, then that's I think, giving us a bit more margin for safety. Look, let's put aside what I think about the company. Let's say what the brokers think about the company. And there's a substantial potential upside here from the brokers. I don't have the list, I'm sorry, of how many brokers are surveyed. And I'm guessing probably not many on Adriatic Metals. Off the top of my head, I think it was only 2 or 3. And that creates issues in itself because obviously the more brokers sampling it, the more accurate your estimates are going to be. But from what we can see, $4.2 price target compared to the last price of $2.85. We can see that the FY22 to FY23 PE is looking pretty good at 18. Obviously higher than the market, but when you've got brokers estimating growth at about 1,000%, then I think that P is quite attractive. Now, why are brokers estimating 1,000% growth in earnings? Well, because we're going from nothing, aren't we? These are soon-to-be producers. They're not earning any money right now. In fact, they're losing money hand over fist because they're investing money to make money down the track. So, of course, earnings estimates are going to be crazy. Look, I've just said, look, let's go out much further than 2 to 3 years and say we've got a 20% growth rate even for the next 5 years, and therefore we get some numbers here which are pretty similar to maybe the brokers. Coincidence, no coincidence. Maybe that's what they're using in their spreadsheets as well. But we get sort of fair value around about 4 or 7, which talks to this, but still leaves us somewhere around about great value, I believe, for Adriatic Metals. Moving on to the next one, Caledus Resources. This is another gold hopefully producer. They're not producing yet, but we're commissioning very soon. We're very soon to get there, and this is the blue spec. This is their other prospective operation. It's 70 kilometres away from their major operation here at Warrawoona. That's in the East Pilbara of WA. It's 100% owned, and that is looking to come on in, pre-feasibility, to be fair, in calendar year 22, and it might be later that year or 2023 that it gets added to what we will have starting very, very soon. We're looking probably a little bit more than a junior, probably closer to a mid-tier miner there at 130,000 ounces of production per annum, 1.5 million ounces of contained golds. Again, probably a sort of a mid-tier in terms of the cost base. And once again, we're looking at sort of net present value versus the enterprise value. So, roughly half of the net present value. We've got a massive exploration upside with Calidus. They really do have some really prospective targets that they're drilling and looking to extend the existing operations as well. And reminder, we'll look at all of the charts of these in the not too distant future. The final one is Vulcan Energy, and the story here is zero carbon lithium. I like where they're based. So they're based in Germany, and there's massive scope for upside in electric vehicle batteries in Europe. I think the likes of Volkswagen, specifically in Germany, they're producing electric batteries and looking to source their lithium as close to their factories as possible. So major tick in that box. You've got the environmental upside as well of it being potentially zero carbon. They're going to build a geothermal power plant to make that possible and potentially also feed into the local grid as well. So there might be some upside just from the electricity side of things. Look, this one is very glossy, very flashy at this point in time. We are a bit earlier in the process compared to the other two. We're sort of a pre-feasibility study due by mid-2022, so that's still a ways away. But I do believe they will get this up and running. And then it could turn out to be, a real success story from there. And I think that this is probably the most speculative one of the lot because it is early in the process. And this is company numbers here. These are not my numbers. These are company numbers. 4.4 billion NPV versus enterprise value of 200 million. It's probably worth the punt on that basis. So the most speculative of the three soon-to-be producers, but potentially the most upside. Hey, with risk comes reward. Okay, having a look at the explorers now, and I'm just about over time already, so I better pick this one up. And again, the idea is to give you a bunch of really fantastic ideas you can go do some further research on. First explorer we're going to look at is in copper, and we're continuing here with this electric vehicle, this battery theme. Copper, you've all seen the BHP ads. How many more, kilograms of copper are used in cars and wind farms than even iron ore and other materials? So, look, it's very much a future-looking mineral. We know there is a substantial shortage in the supply-demand dynamics for copper at the moment because of what's happened with COVID. Chile is struggling to get their production back online, and it's the key industrial metal. So stocks are starting to run very, very low, and that's why we're seeing prices do very, very well. We have operations here in Arizona in the United States. So again, fantastically close potentially to Tesla, much like the previous one was potentially close to Volkswagen. So they're all geographies. Let's look at some of the numbers there. We do have a copper resource of 12.2 megatons at 1.51% for 184 kilotons of contained copper. It's an established mining district. So BHP has a mine there. Rio has a mine there. Freeport-McMoRan has a mine there as well. So, the infrastructure is in place. Outside of the resource, 90% of their holes are showing mineralisation, and there are some amazing hits that they've come up with. So one hit for 34% copper. There's a picture in the presentation that I saw of a chap actually holding the core there, and you can see the shiny metal in it. That same sample had 367 grams per tonne of silver, which is amazing, and 26 grams per tonne of gold as well. They are about to ramp up their drilling program, and that's starting this month. So what I like if I'm going to invest in Explorer is that I don't have to wait too long for those results to come out. So hopefully not too far away. And then if you're looking at companies that aren't producing, they're in that exploration phase, it's very important to look at their current cash level and their cash burn rate, because we preferably don't want to be hit with capital raising anytime soon. Having said that, these guys are probably going to have to raise some more capital within the next 12 months. They're not going to be producing in the next 12 months. There's absolutely no way that's going to happen. They are potentially a few years away from producing if they get there. So they are going to have to fund that exploration, that development from shareholders. You've got a year until you get tapped on the shoulder, I reckon, for that one. Okay, next one is Peel Mining, another copper producer here. And look, I didn't specifically try and skew them towards one commodity. I just went for the ones I thought looked the best. But coincidentally, another copper producer here. These guys have operations located locally here in New South Wales. Once again, 100% owned. They're all very, very close together. Wirralong, Mallee Bull, Mayday, and there's a bunch of other prospects there that they are drilling. Again, they've had some really, really great results that have come out. We do have an indicated resource at Mayday. There's an ongoing drilling program in place, so results shouldn't be too far away, and they'll be sort of dripping out throughout the course of this year. And should they get something going, it's also very close to infrastructure, which assists in the speed of development of the project. This one has a longer runway to getting the job done in terms of cash in bank. 6.4 million versus about a 2.8 million cash burn, so you probably won't be tapped on the shoulder anytime soon, let's say, on that one. And then Venture Minerals, tin, this is a really key word at the moment, tin and tungsten, but also nickel, copper and platinum group elements, that's at PGE there in WA. And this one's pretty exciting because it's literally around the corner from the Julimar discovery that Chalice has, and we know what the Chalice share price is doing. In fact, Chalice is actually looking to earn into that prospect by spending their own money to drill that one, and they could earn up to 70% based upon that. So the fact Chalice is interested is very, very good. We also prospective for zinc as well. And I've left out probably the most important bit. They are actually producing iron ore, and they're doing that at their Riley iron ore mine in Tasmania. We're looking at 1.6 million tonnes at 57% iron ore. It is a lower grade deposit. Hematite, again, is also the least preferred of the two possible iron ore types that are out there. There's hematite, magnetite. But it is a very, very low-cost operation. It's very close to the surface and substantial access to infrastructure. It's not far to get to the Burnie port there. Also in Tasmania at Mount Lindsay, which is another 100% owned interest, we do have a tin and tungsten reserve there. And in terms of how soon until they tap you on the shoulder, we've got $9 million cash in the bank for a $6 million per annum cash burn. And that looks like you're going to be tapped on the shoulder pretty soon. But there are some mitigating circumstances here on that one, which means that might not be the case. We're looking at the first shipment of iron ore at Riley sometime around about now. We're just waiting for the next update from the company. And obviously we're going to see some money coming in here to alleviate this situation down here. So potentially you may not even have a capital raising going forward, as the cash flows from their iron ore sales helps subsidise the rest of their activity here. So that's a really interesting little kicker for VMS. Okay, well that's quite a high-level overview of the key stocks we're going to look at today. Let's head over to the charts and see what they look like. We'll do these in alphabetical order here, starting with Adriatic Metals. And remember, I'm looking for the alignment of short-term trends, long-term trends, and then we're looking for whether we're at an opportune entry point. Certainly, short-term trend looks up, long-term trend looks up, and this is after a long period of consolidation. So we had this initial move when the market, I guess, really, for want of a better way to put it, first became aware of the prospectiveness of Adriatic Metals, sort of June, July, August last year. We've consolidated those gains for the last, better part of 12 months now, which, when stocks go sideways, you do drag out some sellers, some people maybe who don't know the story as well or aren't true believers, but we then see that supply soaked up by the people who do know the story well and are true believers, and they've soaked that demand up around sort of that 2 to 250 level, and now we're pushing towards the top of the range and nudging that last high here at 286. What we're probably going to see is that the supply from that initial run has been exhausted, and therefore without a great deal of supply around current prices, And with the true believers believing that prices are going to go much higher, we will get this supply vacuum. And hopefully with continued strong demand, we do get the move through this 286 level until the next level. And typically we like to work in doubles here once we've had these big consolidation zones. So if we've had a long period of consolidation between sort of 2 and 250, we often can see prices move to potentially between sort of 4 and 5 as a double of that zone down the track before we get the next bout of significant supply. So it looks highly prospective. Obviously, we talked about the fundamental reasons, but it does look highly prospective here on the chart, and I'd be happy to be a buyer around current levels. Next one is Alkane Resources. This is our junior gold producer. It does have a very well-established short-term uptrend, and it is very strong with the recent candles and price actions, so higher peaks and higher troughs. The long-term uptrend has just switched back to up after a period of flipping between sort of neutral and downtrend since the start of the year. So that's also very encouraging. The fact that there's enough upside momentum to pull that long-term trend up as well. I can't see anything really sinister in the candles to suggest that the current run can't continue. I'm happy to buy it at current levels based upon the valuation. If you'd like to find a slightly better price, you might be looking around that sort of 102, 103 level for a potential pullback. But as I said, based upon the valuation, happy to be a buyer here. Okay, BHP and as we get to them, Rio and Fortescue, we're more sort of just looking at the valuations, but the technicals look strong. I think we're seeing a nice trend in the short term, the long term. We have moved, however, from a clear demand side market into more of an equilibrium market. That doesn't mean that the trend is going to end. It just means we're pausing for a while. We might see a little bit more consolidation under that $50 level, which is a key psychological level, before we do see a breakout, which I think will come, and then a move to potentially 60, 70, and beyond. Look, if I had BHP, I'm 100% a holder. If I'm a longer-term investor looking for a key portfolio stock, then I would actually be quite happy to buy it here based upon the valuation. The next one is Caledus Resources. So this was the prospective gold producer and explorer, of course. Looks very similar to the Alkane chart, doesn't it? Probably no coincidence there. I like this one. On the technicals, the short-term trend is looking more prospective, certainly, than it was. The long-term trend looks like it's about to turn up. Some pretty nice candles there. Maybe there's some shadows at the end, indicating we might see a little bit of a pullback into the 50 level. But based upon the improving technicals and some nice volume dynamics down here as well, telling me that some demand has come back into the stock, I'd be happy to buy it around current levels. But obviously, this is a significantly higher risk play than a BHP. Don't need to explain that to you. Eagle Mountain Mining, a very, very strong chart, very strong short-term trend. Long-term uptrend is very well established. We are seeing a little bit of supply around this level, so it wouldn't surprise me if we saw some further consolidation in and around sort of $1 to $1.10, where you may be able to pick it up on a pullback on any particular day. Today may well be one of those days after a very strong performance yesterday. Overall, look, I can't see anything really sinister there that would suggest that we would break probably below 93.5 in the near term, but also we're not seeing as strong signs potentially that we're going to potentially push up to 139 in the near term. So look, this one's probably a little bit more sideways than a couple of ones we've seen to this point, but again, on the basis of what it's got going for it, I'd be happy to add this as a speculative play, a small exposure as a speculative play into a broader portfolio. Fortescue Metals Group, we said that the valuation here was very, very attractive. I think the technicals look very constructive as well. Once again, a little bit like BHP, we have moved potentially from a demand side market into more of an equilibrium market. We are consolidating in this area around about $25, but with higher peaks and troughs generally pushing towards the top of that range. I do think eventually that we will break out through that range, just as the upgrades come through for Fortescue as the iron ore price continues to remain high. Again, as a key portfolio buy, I think you certainly would want to have this one in your portfolio, and potentially even just from the yield perspective, because the yield at the moment is in the high single digits, so sort of 8-9% per annum fully franked. So on that basis alone, you'd add it to a longer term portfolio. Newcrest Mining, more challenged than BHP and Fortescue. You can see that in the trends. It actually is technically still a long-term downtrend, although it that has moved into that neutral phase. We're sort of interacting with that level now. Look, it might look interesting above sort of 29.27, but at the current price, given those technicals, I'm not prepared to call this one a buy at this stage. Looking at Peel Mining, this was that little copper explorer we were talking about. Short-term trend looks good, it's certainly up. Long-term trend is a little bit flatter, but has swung to up. I like the progression here in peaks and troughs, moving up from the bottom left to the top right. A little bit of consolidation more recently, sort of between 35 and 30 cents. But yeah, look, I think the technicals are very constructive. I like the volume spike through here and the push off that. So happy to buy that around current levels, or if you might get a pullback into this green zone here, which is around about 32. But happy to be a buy based upon their prospectivity. Looking at Perseus Mining, so this was the mid-tier gold producer here, a well-established short-term uptrend. Long-term uptrend has swung back to up. That's encouraging. The candles look pretty good, lots of white candles towards the end there, and we are seeing higher peaks and higher troughs. Potentially we're moving out of this consolidation phase here and moving back into more of a demand-side market. There might be some resistance around that high there, which I can tell you in a second is at, it's just obscured there by the name, 166. But look, on the basis of the strength in the developing strength in the trend, I'm happy to be a buy here, and also on its very attractive valuation. Rio Tinto, we said, didn't look quite as cheap as BHP, but certainly not overvalued by any stretch of the imagination, and that's reflected in very, very robust looking chart there. Short-term uptrend, long-term uptrend. We are consolidating a little bit, like the Fortescue and BHP price, but very, very constructive. And again, if you didn't have Rio in your portfolio and you're thinking about adding it, I'm happy to add it as a long-term buy around current levels. Going from the big end of town to the very, very small end, Venture Minerals, hey, an iron ore producer as well. How about that? Perspective for a bunch of other things, and looking very prospective on the chart here. I'd love to get on a pullback. Look, if you did, it was probably would be around about that 14-cent level, but happy to buy it. Yeah, happy to buy it on probably the best looking chart actually out of all the ones we've seen so far. And then finishing up with Vulcan Energy. And we can see here some of that speculative upside that we talked about when we looked at the fundamentals. And it could be really anything, or maybe a shadow of that. And look, time will tell. And it's probably the most speculative of the ones we've seen. But hey, the market is warming back up to it from that huge spike up to 14.20, and the trends are re-establishing. And the candles look pretty good actually towards the end there, with some nice price action coming in as well. Happy to buy that one right now based upon the strength of the technicals and I guess the prospective nature of the fundamentals. Well, that brings us to the end of today's presentation. Thanks for sticking with me. Obviously, there was so much to get through, but hopefully you enjoyed the material we covered. There's lots more of those trading ideas and analysis in our market news section of the website. I do often tweet lots of charts there. You can follow me or the Think Markets handles on Twitter. In terms of upcoming events, why don't you join me this time, roughly next Tuesday at 12 p.m. Sydney time, and bring your portfolio to the table. So enough about the stocks that I'd like to talk about. Let's talk about the stocks that you're interested in. Pop them into the chat window, then I'll give you a quick valuation on the fundamentals and a technical as well. And then there's a couple of others you can register for. Can't miss the crypto one coming up. If you've not yet investigated the crypto space, that will be a not to be missed. And then the 3 turnaround stocks review. So we'll look at A2 Milk, we'll look at Treasury Wine Estate, Kogan, and Appen, and add one more very interesting turnaround play. The disclaimer before I leave you says that everything we've discussed today is general advice. That means I've given you some great ideas here. Now it's your job to go off and investigate those ideas, and then ultimately it's your decision as to what you do with your money. We are a regulated Australian broker. We do have some products that could see you lose more than your deposits. That's important to make sure you read the rest of this disclaimer. If you have any questions at all, please give us a call. It's been a pleasure chatting with you today. All the best for your trading until we catch up again. Bye-bye for now.